You must have a special fund as part of your portfolio for two reasons. One is growth, and the second one is preservation. Just like the traditional funds, special funds are alternative collective investment schemes which are risk categorized. We have low to medium risk special funds, we have the medium risk special fund, and the high risk special funds. For prudence purpose in investing, risk categorization should not just speak about the potential of making higher returns, but risk as a potential of losing money. In the low to medium risk space under special funds, we have the MANSA X Special Fund and the new Hawk Special Fund, which is now 1 year old in the investment business. Before you start your special fund investment, then you should have also done bond investing, where bond investing gives predictable incomes and also objectivity in your investment planning. Bonds give you the lowest form of risk. Then the entry to investing is through the money market funds and the fixed income funds as the low risk category of investment vehicles. Money market funds and fixed income funds will give you liquidity, they are going to give you access and preservation, and that is the launch pad to your investments. That is what keeps you in the investment game. Money market fund or a fixed income fund, because they have similar characteristics, that is a must have launching pad to the other forms of investments. To our today's video, we are looking at the low to medium risk special funds, that is the MANSA X Special Fund and the OAK Fund Special Fund, being the available two alternatives in that space. In this video, we are comparing these two special funds, and we shall be looking at all that comparison about their performance, their architecture, their diversification, and their fund profiles after 3 short seconds of break. So don't go away. In the meantime, as always, give a like to the video, engage us in the comment section, and don't forget to share the video to another person. See you after 3 seconds short break. Welcome back to our comparison of MANSA X and Hawk special funds. We shall begin by comparing their performance, and because Hawk Special Fund started in February 2024, we shall compare this performance from that year 2024, but we shall also use the historical performance for the last couple of years for MANSA X to give us a grounding of the general performance in this space. Year 2024 was generally a good year in terms of performance across all investment vehicles. Going by this schedule and looking at the quarterly performance for the two special funds, then Q1 2024, Hawk Special Fund had a 15.40%, while MANSA X had a 5.62%. That difference is very important, and as we look at the quarter 2 performance, Hawk Special Fund performed at 6.78% compared to MANSA X 4.99%. Quarter 3 performance, Hawk had a 3.15%, while MANSA X had 5.14%. MANSA X recorded a 3.78% in their Q4 2024, while Hawk recorded a 4.05% in their Q4 performance. If you look at the Q2, Q3, and Q4 performance in 2024 for the two funds, cumulatively, Hawk had a total of 13.98%, while MANSA had a 13.91%, giving a difference of 0.07% as the performance by Hawk above MANSA X for the 3 quarters, that is Q2, Q3, and Q4. But we have a huge difference in Q1 2024, where Hawk recorded 15.40%, while MANSA recorded 5.62%. For market analysis, where such a huge difference has been identified, and looking at the succeeding Q2, Q3, Q4 performance of Hawk Special Fund compared with their Q1 performance, and having the fact that Q1 performance covers only 2 months, that is month of February when they started and the month of March, then it means there's something extraordinary in terms of performance that happened in their Q1. And because of that huge difference in performance recorded, it would have been good if there was a clear disclosure of the extraordinary performance in Q1. But for comparative accounting, comparative analysis, then we look at their performance in Q1 2025, and we are lucky that Hawk Special Fund carries out monthly recording and monthly statements compared to MANSA X, which does quarterly reporting. And using the monthly reporting or the monthly recording for Hawk to compare with the performance in Q1 for the same fund, then January 2025, Hawk recorded a 1.60%. In the month of February, they recorded a 1.76%, and in the month of March, they have recorded a 1.30%, which combined, you get a Q1 2025 performance of 4.66%. If I compare the Q1 2025 performance with the Q1 2024 performance with a difference of about 11%, then that amplifies the need for a disclosure of the extraordinary performance that happened in Q1 2024. Comparing the Q1 2025 of 4.66% by Hawk Fund compared to the 4.89% by MANSA X, then for Q1 2025, MANSA X outperformed Hawk Fund by a factor of 0.23%. On average, the quarterly performance for MANSA X throughout the years that it has been in existence, that is the last 6 years, the quarterly performance averages to 4.45%. And considering a period of 6 years from inception of MANSA X and the fact that it benchmarks on a hurdle rate and not the market rates as compared to the Hawk Fund, then hardly do I expect a quarterly performance that outweighs or outnumbers that average of 4.45 by a huge margin. And considering that, then the disclosure for Q1 performance, the extraordinary performance, that was very important. But as a general observation, 2024 was a good year for all the fund managers or all investment vehicles, with Hawk Fund in their year of inception outperforming MANSA X by a huge margin, recording a 35.38 gross return, which left the investors with an absolute return of 29.38%. On the side of MANSA X performance, this was also the second best year in their last 6 years, where in 2024, the fund recorded a gross return of 24.53%, and that means that investors were left with a net return of 19.53%, which is the second best performance for the last 6 years and the second closest to the hurdle rate of 25%. So in terms of comparison of their performance, considering that the Hawk Fund has only been there for about 1 year, while the MANSA X Fund has been there for over 6 years, we can use the MANSA X Special Fund as the standard performance, which, as we continue comparing the performance, as we've done in Q1 2025, we'll be looking into how the Hawk Fund builds its history of performance. But in general, the two funds performed well, and for comparison purpose, we'll have to wait for the second quarter, the third quarter, and the fourth quarter to build reliable data for a comparison. But in the meantime, these two funds performed almost the same, save for the Q1 performance in the Hawk Special Fund, which we analyze and consider it extraordinary, and an explanation should have been given for that extraordinary performance. The second item that we are going to look at to compare these two special funds, we are looking at diversification. These two special funds, they expose us as investors to both the local markets and the global markets, because the funds are investing both in the local and the offshore markets. And they use diversification as an important tool for risk minimization and maximization of the investor returns. And looking at this schedule, we are looking at the extent of diversification as per the allocation of the assets under management to different assets or asset classes. And as per the schedule, when you look at the Hawk Special Fund allocation of its asset under management, which is stand at 2.71 billion to different assets, 62% of that asset under management has been allocated to government securities. When looking at the MANSA X allocation, fixed income instruments, which account for the government securities, have only taken a 14.62%. Could that be one of the reasons why the Q1 in 2024 outperformed the MANSA X Q1 performance? Because in 2024, early 2024, month of January, February, March, the government securities were returning way high returns in the heads of in the levels of 16%, 17%, but that is our observation. The second highest allocation under Hawk Fund went to currencies, indices, metals, and commodities, which took 13%, while cash and cash equivalents took a 9%. Comparing with the MANSA X allocation, cash and cash equivalents were positions number 6 in terms of percentage allocation, and they took only 2.55%. But remember, for MANSA X, the total assets under management are way over 47 billion. So at 2% of that 47 billion could be more than 20% or 30% of the total assets under management for Hawk Fund. But basically, the allocations under Hawk funds, the next were derivatives that took 5%, sovereign bonds took 6%, Nairobi Stock Exchange securities took a 4%, and international equities, those are securities in foreign or global stock exchanges, took a 1%, and collectively or cumulatively, that was 100% allocation of the total assets under management under Hawk Special Fund. While on the side of MANSA X, interest rate derivatives taking 5.34%, volatility S&P 500 took 3.83%, Canadian dollar took a 2.91%, high share MSCI China ETF took 2.69%, Best Buy took 1.47%, BAE Systems PLC took 1.40%, United Parcel Services 1.38%, and Gilead Sciences 1.36%. Those are the top 10 asset allocation of the assets under management by MANSA X, and that only accounted for 37.55%. No, way below. That is way below 50% of the total assets under management. But it's notable that for Hawk Special Fund, being at its infancy stages of investing for this particular fund, they have all lumped together investments for various assets and asset classes. And that is noticeable when you look at the item number 2, that is the 13% allocated to currencies, indices, metals, and commodities, where on the side of MANSA X, you can identify currencies like the Canadian dollar taking a 2.91% on its own. Therefore, we expect that as OC Fund Special Fund grows in its investment over time, they will continue declustering those classification of the assets, and we'll be getting a similar kind of disclosure or a similar kind of reporting in their asset allocations in future. But as at now, it's general to observe that the MANSA X is way far more diversified in terms of its asset allocations compared to the Hawk Special Fund, but that was also informed by their size of their asset under management, where the MANSA X Special Fund has an AUM way beyond 47 billion compared to Hawk Special Fund's 2.71 billion. It also speaks to the advantage in terms of performance because smaller AUMs give the asset manager a way higher advantage in terms of its allocation and strategy, generating higher returns when you compare to a larger asset under management and a different fund manager. On the same length of diversification and the fact that these funds invest in both in the local market and the global market, this schedule gives us the geographical spread of investments by MANSA X. We did not have a similar schedule for the market spread of investments by Hawk Special Fund. For the MANSA X market spread or market diversification of the investments, American market takes 40.34%, Europe market taking 33.48%, Africa market takes on 19.20%, Middle East and Asia are taking 5.95%, while Oceania takes 1.03% of the total assets under management. This is very significant because it means that when markets in one region go down in terms of returns, the fund manager is at liberty to reschedule investments to another market, leveraging or averaging up the returns that are going back to the investors, because the special funds have one key objective of growing the investor capital. And growing your capital cannot come in any other way apart from consistent alpha returns. And the special funds are tailored or structured in such a way that even when during market volatility, the special funds are structured in a way that they are able to deliver high returns to the investors. Our next point of comparison for these two special funds is their base currencies or their sub funds. The MANSA X Special Fund has two sub funds, or there are two funds under MANSA X Special Fund, which are defined by their base currencies. We have the Kenya Shilling Special Fund, which has a base currency of Kenya shillings. Base currency is the currency under which that particular sub fund distributes its returns to investors. Note that these two special funds investing both in the local and global markets and spread in different geographical markets using different currencies, it means that the fund invests in multiple currencies, different currencies, suffering from foreign exchange risks, but it is the base currency that is used to share the returns to the investors. Special funds and the traditional funds, or in general, collective investment funds, work in two levels. There is the fund return, that is before the management fees are considered. Then there is the investor return. So the fund return is the fund manager works for the fund return. Then the fund return is the one that delivers the investor returns, which are distributed according to their base currency. So for MANSA X Special Fund, there is a second sub fund, that is the US dollar fund, whose base currency is US dollar. On the side of the Hawk Special Fund, Hawk Special Fund has only one sub-fund. That is the Kenya Shilling Sub-Fund. That is a special fund. That is the Hawk Special Fund operates only one sub-fund in Kenya shillings. That is to say that the Hawk Special Fund does not have a US dollar fund as at now, but they promise to have one by the close of year 2025. And as per this schedule, we are looking at the performance of the MANSA X US dollar special fund for the last 12 months. And as per the schedule, this fund is also heavily diversified, and the top 10 allocations of the asset under management under this fund account for only 40.45%, with fixed income instruments taking 14.99%, interest rate derivatives 5.88%, volatility S&P 500 index taking 3.32%, WTI crude oil 3.1%, high share, China ETF 2.77%, British pound taking 2.75%, cash and cash equivalents 2.73%, 5 below 1.66%, CME Group 1.64%, and Siemens taking 1.61%. In terms of performance, and comparing with the umbrella dollar funds, with the Hawk Fund, which is not a special fund, and the other US dollar funds, the money market funds and the fixed income funds in the market, then these MANSA X US dollar special fund outperforms all of them by over 100%. This is to say that these funds has records close to 200% performance compared to the traditional US dollar funds that we have in the market. In year 2022, October, when this fund was started, it had an annualized return of 15.08, leaving the investors with a 10.08%. In 2023, the fund recorded a 17.10%, which left the investors with a 12.10% after the management fee of 5%. And last year, 2024, the fund recorded a 17.50%, which left the investors with a 12.50%. And if you compare with the traditional funds that we have in the market, the US dollar traditional funds that we have in the market, which were recording 6%, 7%, then that is clear to say that this fund outperforms them by close to 100% or delivering 200% performance. These funds averagely quarterly gives a 3.03%, and in Q1 2025 it recorded a return of 3.14%. In terms of the investment requirements and the costs related to these investments, this schedule compares the Hawk Fund and the MANSA Special Funds. The two funds, as per the schedule, do not have initial investment fees. There are no redemption fees. Management fees, the MANSA X charges financial services fees of 5%, while Hawk Special Fund is charging at 6%. It is important to take note of that difference of 1%. It could be the thing that makes the difference when these two funds harmonize their performance. Because as our general observation, at the end of the day, these two funds will relatively be performing in the same margins. But the 1% difference in management fee would be the thing to watch in future performance. The target returns, these are not guaranteed returns, is 25% for MANSA X, while the Hawk Fund targets a return of 20%. Performance charges, and this is an interesting part because most investors will be looking at the performance charge, where a performance charge is a percentage share by the fund manager of the return that is above the target return. That means that when the fund manager has delivered a return of more than 25% in the MANSA X Special Fund, then the amount or the percentage return that is above the 25%, the fund manager will take a reward for outperforming the target. And the reward that the fund manager is taking is just 10% of the 100% that is above the 25%, which means that the investor will take the huge percentage return above the 25% of 90%. The fund manager will only be taking a 10%. That will become relevant and interesting when you look at the benchmarking of the two funds. On the side of the Hawk Special Fund, the fund manager is not taking any performance or is not charging a performance fees on their target return of 20%. Actual average return, the MANSA X has had an average return of 17.8% for the last 6 years they have been performing, and that is about 18%. While for the Hawk Fund, we do not have enough data to calculate an average return, being that this fund has only been there for less than 12 months or in 1 year. The locking period, minimum locking period for the two funds is the same, that is 6 months, while the risk levels are low to medium or moderate risks. The minimum investment amount for MANSA X is 250,000, while for Hawk Special Fund is 500,000 as at now. As at now, because we anticipate that that figure will be adjusted in future, probably could be this year, being the fact that the most important thing in business is breaking even. And for fund managers, you break even by virtue of the assets under management. And to accelerate building up of that asset under management or hitting your break-even point faster, you attract or you target high-end investor, and that's why that figure, as our analysis or observation, that's why we have that huge amount of 500,000, because considering the similarity of these two funds, to get into penetrate the market at the same level of competition, Hawk Fund would have come with a similar entry point of 250,000, but because they are faced with the hurdle of breaking even, which is primarily on the amount of assets under management, then that 500,000 makes a lot of sense. The minimum top-up amounts for MANSA X Special Fund is 100,000 and 50,000 for Hawks Special Fund. By virtue of the lesser additional investment amount, still points at our argument of our first break-even point for the Hawk Special Fund by assuming a higher entry point. Then the benchmark, which is very important in our analysis or as per our observation, the MANSA X Special Fund benchmarks on their hurdle rate of 25%. And therefore, they observe the point that despite the market volatility, whether in the local market, domestic market, or the global market, the fund manager and the MANSA X Special Fund targets to hit the 25%. While on the side of the Hawk Special Fund, the benchmark is on the market returns, where 30% of the fund is benchmarked on the bond, that is the 364-day treasury bond. And the second 30% is benchmarked on equities. In particular, it is benchmarked on the Nairobi Stock Exchange Index. And the balance of 40% is benchmarked on the S&P 500. That is significant to say that the benchmark performance for the Hawks Special Fund is the market performance of those three segments. That is the local equity market, that is measured by the Nairobi Stock Exchange Index. We have the performance by the 1-year bond, that is the 364-day treasury bill. Then the balance of 40% is benchmarked on a global index, that is the S&P 500. Then lastly, but not the least, we look at the comparison of the two funds by virtue of their fund profiles. And as per this schedule, the fund names give us the first item comparison, where we have the MANSA X Special Fund and the Hawks Special Fund, where the MANSA X Special Fund has two sub-funds. As the base currency indicates, they have a sub-fund that is the Kenya shilling, MANSA X Special Fund, and we have the second sub-fund that is the US dollar, MANSA X Special Fund. While on the side of the Hawk Fund, they only have one sub-fund or one fund that is the Kenya shilling Hawks Special Fund. The two funds are special funds of a collective investment scheme category. The fund inception, MANSA X started in January 2018, while the Hawk Fund started in February 2024. The fund managers, the SIB Standard Investment Bank is the fund manager for Hawks Special Fund. It's important to note that that is the same fund manager who partnered with the Safaricom to manage the ZD Money Market Fund. Then on the side of the Hawks Special Fund, its fund manager is the Faida Investment Bank. Previously, we do observe at times that the fund managers are the faces or the chief investment managers or the portfolio managers for the two special funds, where we have attributed the Hawk Special Fund by the face of Mr. Hian Kaangara, who is the Director for Global Markets under Faida Investment Bank and also the Chief Investment Officer or the portfolio manager behind the Hawks Special Fund. While on the side of MANSA X, it has been synonymous with the FN Ashon Mongai, who has been the face behind the MANSA X Special Fund, being a director in the Global Markets Standard Investment Bank. But something that is very important also to note is that it's MANSA X Special Fund that birthed the Hawk Special Fund by the mere virtue of the fact that Mr. Hian Kaangara and part of his team, they worked under Standard Investment Bank, in particular the MANSA X Special Fund, while under SIB in 2018. Hian Kaangara joined the SIB in 2018, and about 2021 is when he left SIB to join Faida Investment Bank's proprietary product, Hawk Special Fund, and therefore, just like any other fund in the market, if you look at the money market funds, the Etikas, the Saiton, we have Lofty Carbon, we have Kuza, and the rest, they all can be traced back to a parent fund manager, where the majority of the faces behind these funds originated from. And the trustees for the MANSA X is Kingsland Court, while Coop Bank is a trustee for Hawk Special Fund. Something that keeps coming up is the function of the trustees, where the trustees bear the responsibility for these funds. The responsibility is not borne by the fund manager, but the trustees. One of the functions of the trustees is to monitor the risks exposures for these funds and any other fund, because the trustee as a prefect in the fund ecosystem is the one that guards the interest of the investors. The auditors are Chatafai LLP for MANSA X and Joroge Courier and Associates for Hawk Special Funds. Custodian. These two funds share the same custodian, that is a I&M Bank. And for those who look at custodial service or the banking system and they want to think about the exposure to risks, then sharing the same custodian could be assumed as a part of risk when it comes to diversification, but there is a very low risk level when it comes to sharing of custodians as custodial banks, because the amounts or the assets under management, very little or a very small percentage of the fund sits with the custodian, because every other time you deposit money with a fund manager, the fund manager has already identified where that money should go. So none of your money stays with the custodian. The custodian only takes into account of all the funds that came through the custodial service, And that is in purpose to compare as a control with the records of the fund manager, looking at the cash and the cash equivalents as items of investment of what should be sitting in the custodial account is a very small percentage to form a huge risk in terms of comparison. These two funds are properly regulated. The fund managers and the products are regulated and registered by the Capital Markets Authority. And lastly, the assets and management, MANSA X Special Fund have been there and enjoying the monopoly for the last 6 years has accumulated a total of 47.29 billion, while Hawk Fund, the newest kid in that space in the market, has so far accumulated a 2.71 billion as assets under management, which is very commendable in terms of performance. And that concludes our comparison of the two special funds, that's the MANSA X Special Fund and the Hawk Special Funds. Thank you for watching and see you in our next video.